Are you listening to me? If you are at retirement age, or you are getting ready to cross that finish line, you need to wake up and look at where your hard-earned money is actually going. You cannot afford to play guessing games with your portfolio anymore. You see a company like ServiceTitan trading under the ticker TTAN, providing software to plumbing, heating, and electrical companies across the country, and you think, wow, what a great business, everyone needs a plumber. But do you actually know who owns it? Do you know who is driving that bus? Because if you don't know who the largest shareholders are, you are flying completely blind, and that is a direct threat to your financial security. Let's look at the absolute truth of the matter. When you buy into a modern technology company like ServiceTitan, you think you are partnering with the original founders Mahdessian and Vahe Kuzoyan. You think it's just two guys who built a great software platform for the trades. But that is the illusion, and that illusion breeds a false sense of safety. The reality? The founders have been heavily diluted over years of raising massive amounts of venture capital. Today, the biggest, most powerful gorilla sitting at the table is an investment firm called ICONIQ Capital. They hold a massive chunk of this company, over 20% of the shares through their various strategic partnership funds. Think about that. One single institutional firm, ICONIQ, holds billions of dollars worth of this stock. And right behind them, you have other massive private equity and venture firms like Bessemer Venture Partners, Battery Ventures, and Tiger Global. These are not everyday investors. These are massive institutional conglomerates that play by a completely different set of rules than you and I do. They are looking for massive, hypergrowth returns, and they have the power to move the board, change management, or force major corporate decisions whenever it suits their bottom line. Then you look at the other side of the ledger, public institutional money. You have firms like BlackRock, Vanguard, and T. Rowe Price holding blocks of shares, shifting them into mutual funds and ETFs like the Vanguard Total Stock Market ETF or the Fidelity Contra Fund. Now, why should this send a shiver down your spine if you are retired or retiring tomorrow? Here is the big fear, the question you should be asking right now. What happens to your retirement nest egg when a company's stock is concentrated in so few hands? When a handful of venture capital firms and giant institutions own the vast majority of a company, you are no longer investing in a standard, stable business. You are strapped into a high-stakes vehicle driven by Wall Street elites. If ICONIQ or Bessemer decides tomorrow that they want to reallocate their capital, or if their internal fund timelines dictate that they have to cash out and return money to their own investors, they could dump millions of shares onto the open market. What do you think happens to the stock price when a massive institution panics or just decides to exit? Plummets. And it plummets fast. As a retiree, you do not have 10, 15, or 20 years to wait for a stock to recover from an institutional sell-off. You need preservation of capital. You need income. You cannot afford to be collateral damage in a Wall Street chess match. So what is the actionable takeaway here? What do you need to do today to protect your financial freedom? First, you must look at your portfolio and check your exposure. You need to see if you own ServiceTitan directly, or if it is buried inside one of your actively managed technology mutual funds or small-cap ETFs. If you find it there, you need to ask yourself if you are comfortable holding a high-beta, volatile tech stock whose fate is controlled by private equity giants. Second, if you want a secure retirement, you must prioritize companies with stable, diversified ownership structures and, most importantly, businesses that pay you a consistent dividend. Giants like ServiceTitan do not pay you a dividend to hold their stock. They put every single dollar back into growth. But you are at a stage in life where you need your money to work for you. You need dividends to pay for your groceries, your healthcare, and your lifestyle. You cannot eat potential growth, and you certainly cannot pay your utilities with Wall Street speculation. Do not let the slick names of tech companies distract you from the truth of who owns them. Check your accounts, understand who holds the power, and shift your money into investments where you are the priority, not Wall Street insiders. Stay safe, stay smart, and protect your hard-earned wealth.